Hello, welcome back to the Trading Triangle. I've got the wrong screen on, so let me get that off already. A good start, wasn't it? I've clearly been daydreaming somewhere. How you
You're
doing,
on
Kaye, today?
vacation mode, my friend.
Yeah, I just come back from a wedding for people that don't know. So I've been, heavily, happily and drinking as well. So it's been good fun. How you doing, Kaye?
I'm doing great. It's a long weekend here. It's Memorial Day, so wishing everybody happy Memorial Day. Hopefully everybody gets the rest. Enjoy the weekend with your family and friends, and get ready for a fireworks week next week. Starts on Tuesday though.
Yeah, of course. We were going to say that. Obviously, the market is closed tomorrow because of Memorial Day. We're actually closed here in the UK as well, so kind of a day off for kind of everyone involved with the markets, pretty much. So yeah, before we get into the stream, obviously, we massive disclaimer. We're just a couple of guys looking at the charts, giving our perspectives. So it's not financial advice, just something that we love to do every week, every Sunday at 1 p.m. Eastern time. If you can take the time to share this stream, that'd be fantastic, and get out to more eyes so that people can request their tickers a bit more. And obviously maybe get some ideas from other people, which is always good to see. And before we jump in, obviously, to the slideshow, massive thank you to Wolf to let us use a platform. Couldn't do without you. Really, really appreciate it. And of course, put your tickers in the comments down below so we can get to them a bit later on. Take about 15, 20 minutes to get through the normal stuff, looking at SPY, QQQ, the earnings, the fear and greed index, our own picks of the week, and then we'll jump into the requests for the week ahead. Yeah, should we jump into the slideshow, okay?
Let's do this.
Sweet. How was your trading last week? While I get
I
this
think
up.
the trading was good until Friday, but we weren't worried about the regular trading. We played out the Snowflake earnings, which was on my Substack. So if you did not subscribe to it, go ahead, subscribe to it. And if you don't want to be a paid version, go read the lessons learned from the free version. We doubled our, so we basically profited 100% on the trade, and there are a lot of lessons from that.
Good trading week then. Fantastic.
Yeah.
And the link for that will be in Kay's bio, of course, as normal. So we'll jump into the spreadsheet, the slideshow. We've got the market overview for last week. Actually, quite interesting. I was kind of not really watching too much last week. I was concentrating on the events, as we mentioned at the beginning, with the weddings, etc. So Microsoft, Google, pretty much flat. Meta, 2% down. There's a big one there. Apple, 8% down. I'll let Kay talk about that in just a second. But a couple worth noting, we've got NVIDIA down almost 4% with their earnings coming up on Wednesday, and Tesla down a handsome 2% as well. So not too much movement. Maybe it felt more negative than it actually was. But do you want to talk a little bit about Apple, okay?
Yeah, absolutely. So the Apple news was basically Donald Trump coming out again, and he had a Truth Social post, and then he also talked about it in many of his appearances that he was not in favor of Apple building the iPhones in India or anywhere else in the world. So not specifically talking about India. He wants the phones to be built in the United States, and then a lot of analysts, they have their opinion that building a phone in United States will cost that phone to be about $3,500. So it is a pipe dream, and also supply chains cannot be reconfigured in a snap of a finger. So it may take time, and there are deliberations that Apple might even just hold down and not do anything, and just play it out for the next couple of years, and maybe things will turn around in a couple of weeks or so, or couple of months or so. So that's what happened. There was a lot of jitters in the market because of that, and this constant ping pong of tariff on, tariff off, tariff on, tariff off. I think as traders or as investors, I think for us, we have to just come to terms that this is how it's going to be for the next couple of years, and this is how the volatility will be in the market, and this is how we should train ourselves to trade with or invest with. So that's all I'll say over here.
Yeah, I think the volatility people might be a little bit used to now. Perhaps a few people have been burnt. Perhaps people have been getting a bit lucky. So just bear that in mind. Obviously, it's a very news-driven market. We're speaking a little bit about that before the actual stream itself. And obviously, it'll be a theme kind of throughout the stream as well. So obviously, expect some more kind of volatility talks. And with volatility comes opportunities. So just keep you in mind out for that one. We'll move on now to the fear and greed index. We're still sitting in greed. Last week we were greed 2. We've actually come down just a couple of points, but still sitting at 64, so it's still pretty respectable. Obviously, we've got SPY and QQQ -1 to almost 2%, both of those. Do you want to talk about the key events in the put to call ratio there, Kay?
Absolutely. So put to call, we were 0.66. Now we are we are up to 0.72, which basically means a little bit more bearish. But again, this is against in the same range. It's not something that we should be extremely worried about. We were worried about when the extreme fear at 3 or 4 or 20. That's when the put to call was about 1. So the market was pretty even. So generally that shows that the market is very bearish, because in general, market is always bullish forward looking. Key events next week is going to be actually a very busy week next week, even though it's a shorter week. Monday, the market is closed, Memorial Day holiday. We have the consumer confidence numbers coming out. So that is going to be very important. We have a lot of earnings we'll touch upon in the next slide. We have FOMC minutes coming out. So even though lately we haven't really, markets have not been moved due to FOMC meetings or minutes, but this is going to be important just to kind of get an idea whether what is really being discussed by the Federal Reserve. Are we going to see a rate cut? Not going to see a rate cut. So a lot more maybe important to see that. Then you have GDP growth rate numbers for coming second quarter. That's going to rock the markets if you see another negative decline. And as per the older definition, or maybe the same definition, if you have 2 quarters of negative GDP growth, get into a recession. So all those things are going to start playing out. And then, of course, throughout the week, you have all the different Fed speakers speaking. I don't see that's going to be a major thing on the market. It's going to be the FOMC minutes, the consumer confidence, the GDP growth numbers, and the earnings, because the big one is reporting earnings next week, NVIDIA.
I think that was really well covered. And with that, obviously, segue, we'll move on to the earnings report. So that happening this week. And we've got OKTA there. I think you're covering that one today. So looking forward to what you've got in store for us there. The big one is obviously NVIDIA. So after close on Wednesday, that will definitely move the market one way or another, create that extra volatility that we all need. But there's some more names on there that I kind of don't really look at too much. We've got Marvell after close on Thursday, and that's a popular name. Of course, you've got Salesforce as well, which might be one that you're looking at. Anything else that you're looking for?
Yeah, so we had the big software company Salesforce reporting earnings. That's a big one. The reason is because that kind of tells you how the B2B businesses they look at. We have Costco and Dell. So Dell will give you an idea on how the AI spending, infrastructure spending is continuing, and Costco is going to give you an insight into how the consumer confidence is, right? So that is also important. I don't see what's at the bottom on Thursday. I think that's pretty much it what I'll be watching. I mean, there is of course we have Zscaler also, which is on the cybersecurity side. So Thursday is going to be pretty packed, I would say.
Yeah, definitely. After the close on Thursday, just before the weekend closing, a little bit of drama there for people holding those particular stocks or interested in looking at those stocks. We do have a question on the screen here. We've got, hello guys, what is your take on how EU tariff, 50% tariff is going to impact the markets in the coming 2 to 3 weeks? I think June the 1st, this is going to be implemented. Okay, you want to take that one?
Well, so I think it's if it gets implemented, I think there's going to be a big shock, right, to the market. But the problem is that we cannot predict anything. So we have to take it day by day, because you could get one truth social or truth post announcement one day, and the next day is down to 25%. Or maybe ratchet up to 100%, right? This has become like a game. So just play the game.
Play the game, yeah.
Yeah, participate in the game, right? Enjoy the volatility and play with it. Right? That's all I can say.
I think
go ahead.
From like a long-term perspective, maybe some people are looking at this question as well. So maybe just having those kind of levels that you like to buy stocks at, whether it be the 200 moving average or the 50 moving average on a technical level, or you just like the whole dollar amount. Say, for example, just hypothetically, Tesla comes back down to $200. You like that. It's come back down because of volatility. You bought because you liked it at that price. So have those levels in place for the stocks that you love, I think, for the longer term. But like Kaye said, I think for the shorter term, trade volatility and take the opportunities. Is that right, Kaye?
Yeah, that's exactly. And I think you should also add another SMA into your analysis, is a 300-day SMA.
Yeah.
So because what ends up happening is when the market pulls back massively, like 5, 10, 15%, 18%, you will see a lot of good companies, they will pull back to those 300 or below SMAs, right? Buy those at those prices, right? If that is in your long-term portfolio, don't hesitate, just buy them, even though cost basis might be super low because you invested like 10 years back. Buy those equities IVVs, or sorry, S&P 500s, QQQs, buy them whenever you have those pullbacks. Because honestly, Trump is giving you these things on a platter, right? If the market kept going up every single day, or how would you benefit from it?
Yeah, I think since you mentioned the 300 moving average a few weeks ago, I've added to my charts, and I thought it was interesting. I don't use it; I never have really used it, but it's interesting to kind of observe it and where it is. And of course, we do have a follow-up comment here. The 300 moving average, okay. Max, I heard people use them as 200. All right, I will try it. It's worth a look because obviously it is interesting to see how much stocks actually do sell off in this particular environment. Obviously, it's not so much now because we've rebounded mostly. But in that kind of drawdown that we had for a good space of a month and a half, it's interesting to see how far it can actually really go, especially for companies that are really struggling.
Yeah.
Like UNH at some point obviously was really dropping off. AMD was really dropping off at one point as well. So it's definitely worth adding it to your indicator arsenal if that's a thing. But yeah, we're happy to move on there, Kaye.
Absolutely. Yeah.
Sweet. So the first chart of the week obviously is SPY. As always, we have a look at kind of what's going on. We did speak a little bit about this before the live stream as well. I think Kaye's got a bit more of a bearish outlook, and as have I actually. I think we're both on that kind of agreement. Whereas we do have, if you can see my pointer on the screen here, a bit of resistance that we might be just bouncing off temporarily here. But I actually see the 50 and the 20 moving average looking kind of a bit more of a support here, but I think you actually looking at the gap fill, which is kind of a similar sort of level.
Exactly.
But it is worth pointing out that we are still only 6% off of all-time highs, which is incredible. So perhaps if we get a bit of reaction here, that might be just the next leg up, depending on where we are in the news cycle. What are your thoughts on SPY?
So if you actually step back for a second, this is an exact pattern for making lower highs, right? You had a massive pullback, then you went back up, but you did not actually hit the all-time highs. You stopped, I guess 3-4% before that. Now you're having a pullback. You'll probably see another one, and that's how you make a lower highs. So that will show us that S&P 500 is in a short-term downtrend. And I think the reason we saw a lot of strength is, of course, the whole tariff on, tariff off, but I think also because the earnings did not disappoint this time. Earnings came out pretty strong. Question is what's going to happen in the next earnings, because a lot of this impact that we had in this second quarter, first quarter to second quarter, you will see that impact on the earnings for the next quarter. So.
And I think that kind of around the earnings there, I think a lot of companies were thought to give not much guidance, if any guidance. And companies have actually been coming out and giving guidance, haven't they? So it's been interesting to see what they've been saying as well, with respective industries, of course. But we'll move on to the Qs. It's very, very similar. Of course, we do have the similar sort of pattern. Kaye, you're probably looking for the gap fill there. I know you like those, and the same with me, kind of 50 and 200 moving average there. The 20 moving average is definitely worth looking at. Maybe we get a short-term bounce back up to volume and then maybe a move lower. But yeah, that's yet to see. Obviously, trading is a funny one. We could actually have a 2-3% gap up tomorrow. Not tomorrow, but Tuesday. Just because of how the markets are at the moment, we just don't know. The Qs are only 6% off of all-time highs as well. I think is worth mentioning. Any thoughts on the QQQ before we move on?
No, I think it's going to be the same. I think we might see a little bit of a change based on NVIDIA's earnings, but it's going to be following the pattern for SPY.
Awesome. So before we get into the picks of the week from me and Kaye, make sure you put your tickers in the comments. We've had a few come through already on the screen. We've had UNH, which is one of those that's kind of hot topic. We've had OSCR, CLSK, CLSK is what I tried to say there. SOFI, and then we've also got the same actual same one. So we've got CLSK, OSCR, maybe Elashiv, Pinch, if I said that right. Sorry if I've said that wrong. You can actually request maybe a couple more because you've already got those written down for someone else, Abby. So yeah, maybe if you request a couple more. But yeah, we'll leave that on the screen for a couple of seconds while I get all this sorted out. My pick of the week is actually Amazon. Interesting one because I've been picking the last 3 or 4 weeks kind of smaller cap names basically for the move for the week ahead. Last week you won, Kaye, for the first time ever.
Yeah.
Quite literally. You had, what was it you had? I can't remember now.
Snowflake.
Obviously, earnings was a big part of that, of course, on Thursday after the market closed.
Yeah.
Do you want to have a little talk about that quickly before I jump into this chart?
Absolutely. So Snowflake, we did see a gap fill on Snowflake. Last time when we showed you the chart, unfortunately, I cannot show you the chart right now because I don't have it here on my side. So we had this massive gap up from the earnings, and we did play earnings as well. It was a broken butterfly, and the idea was that we had a positive bias on the stock to move upwards. However, because generally you can play a straddle or a strangle, these are all option plays. But because the IV was so high and the option prices were so high, it was very expensive to actually play that. And if you get it wrong, you'll basically end up losing pretty much everything, because you would have an IV crush. So we used butterfly, and if you want, you can definitely go and check out my Substack. The article is free for the lessons learned on why did we place that butterfly, how did we profit from it. So it gives you the whole idea, the thought process behind how are we using the earnings to trade. But bottom line, hey, Snowflake delivered. It's in the process of filling that gap, which they created in one of the earnings back in February of 2024. So it's almost 1 year, more than 1 year back. Um, I still think, because now they have created another gap up, I feel like once we have a little bit of a stabilization in the price is probably going to pull back again, and it'll slowly start to make that higher highs. So we could see Snowflake again moving upwards. By the way, it's also in part of my top 5 stocks for 2025. I did exit my position on Snowflake with a small profit because I wanted to move that money into SMCI. So full disclosure, but it's still part of my top 5 stocks for 2025.
And we can access your Substack on your X profile, is that right?
Yes, you can.
Cool.
Yeah.
So obviously you can get that at InvestK on X as well. My pick was actually Grab. It actually down 1%, so I actually lost a week, which is a bit of a disappointment. But of course, I won 8 weeks before that, so it's completely fine. It came back down to my entry price, which I was talking about in that chart, though. So I have taken a position, of course, because I said I would, and obviously the kind of risk management beyond that will be from there. But we'll jump into the charts once again. My pick of the week this week is Amazon, as you can see on the screen here. I like it basically for confluence. I'm not too sure if I like it to buy just yet. I want to see what the price action is like on Tuesday. This is mainly for trade. Obviously, I hold a little bit of Amazon for the long-term portfolios. Pretty much everyone does if they hold any sort of big basket stocks like VU or any SPY indice, basically will have Amazon on it, of course. But for a short-term trade, I'm looking for something kind of around 195 to 200, depending on what the price action is like. Because we have 3 moving averages here, we've got plenty of volume on the right side, and we have a gap fill here at 195. So that's a lot of confluence here for such a big stock.
Let me add one more confluence for you. That's 300-day SMA, also 195.03.
Oh, wow, even better. So I need to start adding these to the charts, perhaps, just for UK on these weekend sessions. So that's a good one to have as well. The 300 looks like it's coming just around this sort of area. And also, you could have potentially a trend line drawn. Didn't draw it today, but if you drew it from the tip here and drew it across all the tops down kind of this area, then perhaps we get a bit of a break of that trend line in the same sort of movement. So yeah, there is potential here for Amazon to kind of move up higher, but we do need to see some price action and some good, effective candles in that price action as well. So perhaps we get a bit of a hammer candle around this sort of area. I think that would be quite bullish to see for Amazon in the future trading. Price targets obviously back up towards this sort of resistance point right here, about 214, I think it is, and then beyond that, kind of towards this gap fill here of 236. So they're the kind of loose price targets I have in mind for Amazon. I'm not saying it's going to happen this week. We've only got 4 trading days. It's not the biggest mover within the market, as you can see on the chart here. But yeah, that's my pick for the week. Anything you want to add here for Amazon, Kaye?
No, I think I like Amazon. I think I want it to fill the gap, and probably add to my long-term position slowly as we see the trend.
I think it's important to note actually as well, if we do break down even further, which is entirely possible, the markets are very emotional at the moment. We break this kind of trend that we've kind of seen in the last few weeks, really. I've drawn another line here of kind of 177-ish, and that's another gap fill down there. So I know, Kaye, you'll be mindful of that if we do break down further for the future. So that's something to be looking out for if you're looking more negatively towards the markets. Yeah, we'll move on. Obviously, you can find me on X at SeanTrades_, and you can find me on YouTube as well, releasing some really interesting videos coming out in the next couple of months. I've got them all planned. Haven't had the time filming just yet because obviously life is busy, but everything's kind of calming down now, which is absolutely fantastic for me. And of course, on the right side there, you've got the trading community TTR, which subsequently have actually changed the logo, but not on here. So obviously look out for a slightly different logo, but it will still say TTR. And you can get all the kind of information on the landing page from the X profile as well. So go ahead and check that one out. Be good to have you along there. Right. So Kaye, what have we got from you this week?
Well, we have OKTA. It's going to report earnings. So let me quickly open OKTA on my side as well. And let's talk about a couple earnings aspects. So we are expecting an revenue of about 680 million. Last time they reported 682 million. So pretty much in the same ballpark. The difference is that we have 30 up revisions on OKTA. So
Wow.
seems like it's going to be every analyst is super bullish on OKTA. They have not missed a single EPS or revenue since April of 2020. So they have been like pretty solid in reporting earnings. So we expect a similar trend that's going to happen here. The expected move is generally about $20 or so. And that you could see in this chart is every single earning, you will see either a gap up or a gap down. So you will expect something similar happening this time around as well. Now, if you can, is it possible for us to remove this logo? I cannot see the price, but maybe it's on my side. Let me pull it up.
I've got 143.
143. Okay, so 143 and 102. That's what basically we that's the gap, right? That's the range we expect the stock to move on.
Okay.
I think personally, if we see the general bullishness, considering everything is happening, the stock is up almost 30% year to date. Maybe 25%. Let me see. Yeah, 57% year up to date. So I will be a little bit more bearish here on OKTA, but I haven't really figured out what trade I should take. I might look at doing something neutral here rather than having a bullish or a bearish position, because we will have a gap up or a gap down. That's for sure. But you'll probably hit a 143 or come down to about 103. That's the range we're looking at. Again, a binary event. How would you play this, Sean?
I wouldn't just yet. I would wait for the earnings to play out. And then see if those key levels of 103 almost and 143 gets touched. I think you kind of mentioned it slightly there, especially alongside the options trading side of things. But yeah, I probably wouldn't trade this. Definitely not before earnings. Maybe it's a very, very small bet, essentially what it is. Like you said, it's a binary event. It's interesting you say down revision or down. You're expecting it to go down, essentially. Which means it's got to go up 50%, right?
Yeah, that's my bias. So my bias is because we are up 57% year to date from the lows of in the beginning of the year. And the other problem is that if you are going to go into options, you only have Tuesday, right? You only have the day off right after reporting earnings, right? So you don't have a Monday. Monday is closed. So generally, you want to see how the option chain behaves before you take a trade on. Like you can take a trade on NVIDIA or Salesforce because you will at least have a Tuesday and a Wednesday to think about the trade. This one, I haven't really thought about. I might not even take this trade, but this is something that we can probably look at how it behaves. But you will see a gap up or a gap down. 100%.
When you say how the options chain behaves, what are you looking at there?
So generally, what ends up happening is we tend to see where the orders are coming in. Sometimes, if you have a couple days before the earnings, you can start to see where the bias is. Is the bias towards the call side or bias towards the put side? Because the EPS is all positive right now, and they have always beaten their earnings. So beating earnings is not going to be something that will be out of the blue, right? If they miss something, which they haven't missed, but there's always first time for everything, so that could happen. But I'm not going to place my bet on them missing it. So they're going to beat it again. So that's a given. So then what is the market really looking for from OKTA? Is it the growth in and the future guidance? So if like other companies, they don't provide their future guidance, that might pull the stock back. And also I might see some profit taking, right? Because you are up 57% year to date. You might see some profit taking happening here.
They're big numbers. You've got FinXL here as well. So every time there's earnings report, next day there's a huge volume trade in OKTA, but no certain price trend. Better stay out of it. So I think that's what he's thinking as well. And likewise, I think across the board we're thinking perhaps maybe wait till after earnings for anything. We'll see. But that's kind of all the thoughts I have. Maybe perhaps we can come back down and retest this line of 116. But of course, you mentioned the kind of volatility in the move after earnings. That's kind of redundant there. So it's kind of hard to pinpoint that as a really good point of technical analysis. I think just wait until after earnings, as we've said a couple of times now. But yeah, awesome. We'll see how that performs this week. Maybe you'll get another one on the board. Who knows? But I'll actually have to make a slide to see how we're doing.
I'll definitely be on the board. I don't know if it's going to be on the downside or the up.
Yeah. The good thing is you won last week, so you've won one. Where can we find you then, Kaye?
You can find me on X, where I generally post most updates. But Substack, I've been very, very active lately. I've been posting a lot of trades there. So if you want to follow along on the trade, sign up. It's both paid and free. On the paid version, you'll get the trade alerts and the thought process behind it. On the free version, you'll have lessons learned mostly on how the trade performed. So I don't expect that all my trades are going to go well because it's mostly binary event trades. But what you learn basically is the thought process that goes on how you trade earnings. And then, of course, on YouTube, we will continue to make videos. I just haven't had enough time lately to make videos specific to stocks, but I have a couple video plans that will be coming out in the next few weeks.
And I've just left the link there for Kaye Substack in the comments as well. So if you make it easier for you to tap on that, so go ahead and tap on that and see what it's all about. I think it's good stuff over there. And with that, we'll move on to the charting section of the stream. Before we do that, I'll stick up the banner so you can remember to put your tickers in the comments so we can get to them all. We've got a few up running now. I think we have, don't we?
Yes, we have. We have 1, 2, 3, 4, 5, 6, 7, 8. We have 9 ticker requests so far.
9, fantastic. So we probably need about 5, 10 more to come in, just to kind of really fill out the time until 1 hour slot-ish. We like to try and fill. Right, let's get this chart up. Here we go. Right, what's first?
First one is the talk of the town, UNH, United.
Here we go, United Health Group. Still struggling, isn't it, Kaye?
Yeah, 100%. And I think if you follow Twitter or X, whatever you want to call it, there were a lot of folks that they profited for the pullback, right? So the lowest we hit was about what? Intraday was 247 with that little, and then we had this one up to 323. So a lot of traders, they took opportunity and they basically profited from it. And now we are seeing a pullback again on UNH. So the problem with UNH right now is there's some fundamental problem with UNH. Doesn't mean that it's not a good position to buy. Now, if you're going to buy from a long-term perspective, I would say you basically are below all the moving averages, right? So you can continue to dollar cost average, but do a weighted dollar cost average, which means that you don't put all your money in one go, right? Slowly nibble it away. Like maybe add one stock. I'm just going to say add one stock. Maybe next week, try another stock. But bottom line is don't add until we see a floor. I don't think we have a floor yet. Unless we see some consolidation at this level of 290, 300, 320, stock has stabilized, because it may take a 1 or 2 quarters before this whole fiasco plays out. Something similar to happen to CrowdStrike. Remember when they pushed a wrong code? It's different, but we saw a similar reaction, right? You saw this massive pullback, and then the stock eventually recovered. So we will probably see something similar happening. United Health Group is a very big company. It's not going to go under. But it's just been one of those, I guess, the era of, like, you had the UNH CEO short last year, the stock fell down, and then now you have this fiasco with UNH.
Yeah, I think we definitely need to say, you touched on it a little bit there, to kind of see like a reversal almost. So for me, reversal would be to have higher lows. So we obviously set a low here so far. We're kind of in this sort of area, so maybe we set a higher low slightly above that, and then we need to set a higher high in this move, but potentially. We need to see that successively carry on, and then we'll draw a trend line if that happens. But if that breaks lower, then obviously that's a break of trend. But basically, you're looking for it to follow this trend line up until these gap fills. So the first gap fill here is 26%, the second one is 93%. Sounds juicy, but where the stock is now, It's very hard to make a compelling case to buy that unless you've got obviously some spare cash for a position that you kind of want to lock away for a long time, or potentially lose, of course, because you're not going to definitely win these trades that you're going to be setting out to have. So definitely have that in mind, that you're not going to win every single trade. It's not to say you won't win this trade, but it's just have that in mind that you could lose this money that you're going to put on, especially with such a fragile stock. And I think that's a good word actually for this stock. It's very fragile.
Yeah.
It's hard to buy at these levels, but it can be a potential money maker if kind of things go well, things turn around for the company.
So if you think about like two scenarios, right? Scenario one, take CrowdStrike for example, right? CrowdStrike had a similar reaction, a big pull down, we had back. Think about Boeing. Boeing, it used to trade around the $300-$400 mark, and after a series of disaster, the stock is still trading around $200 odd, right? So the stock has still not recovered. So it could play either side, right? Not every stock is going to have a full recovery. That's the key. That's why a lot of traders made money here rather than investors, because they got in, they got out, they got their 15%, and they are like, okay, we are out of this trade. They made money.
Job done. Yeah. No, should we move on?
Yeah. Next is OSCR. OSCR.
This one's getting a lot of attention at the moment.
Yeah. Why is that? Let me see.
It's meant to be groundbreaking healthcare, I think. I haven't actually looked much into it. I've only just seen the noise. I know it's got good fundamentals. That's for sure. It's still definitely within. It still is to make another move higher, I think. Maybe we'll come back down for a retest here for the stock.
Okay.
After that.
So the short interest is not that much. Still high, 7.56. It's interesting.
I still keep meaning to do some actual research into this, but it's supposed to be quite. There's lots of potential behind it, should we say?
Interesting, yeah.
It has an interestingly bad week though.
Well, they had this massive gap up, and it's basically filling the gap, right, with the pullback.
True, that could be an interesting point for people. I keep saying interesting. $13 ish. There we go for the gap fill. So that could be a point of contention for traders. For long-term stock, of course, if you like it, then there's no harm in adding it around the 200 moving average. The fact that it is below the 200 moving average and has stayed down there for a few days doesn't give me a huge amount of confidence. But again, it depends on what kind of research you've done for the company. Are you interested in healthcare at all?
No, I don't trade healthcare as much. I mean, I have traded here and there, but not necessarily. But I think I feel like I might put this on the watch list. I might want to do a little bit more research on this one.
Yeah, I like it in a way. It's kind of bounced off of the 200 moving average for the weekly chart. You can see here, the red line is the 200 moving average for the weekly. So it's bounced off there nicely. But maybe it's come back down here to retest the 20 and the 50. Yeah, there's definitely potential there.
You can play you can play to the downside, because the point of control, and honestly, the point of control is right at the 1279. So you could play that level, right? That the stock would go down to fill that gap.
So that's that level there that I've just marked on the screen.
Yeah, exactly.
Yeah, Shane Miller says full porting. I don't think so. No, not from my perspective. That means you put all your money in there. Not having that. I've been down that road in my very early days of investing. It's not the right one.
Oh, that meant I did not. That's a little bit. I didn't know what that meant.
Oh, there you go. Full porting is full portfolio into OSCR.
Dude, you never do that.
Taken out of context. Don't clip that.
You never do that.
No.
I mean, I know that there are some very successful YouTubers or Pinterest people who just went all in on one stock. But then again, don't call it trading and investing. Call it gamble. And if you consider it as a gamble, great. Call it a gamble. It's not trading and investing. Investing is you never go all in. If you want to go all in on S&P 500 or QQQ, maybe I will still call it investing, but not on stocks.
I would say, though, if you focus on one particular company and it's your livelihood, it's what you're passionate about every single day, in and out, you could full port that if you really wanted to.
But I'm not going to
recommend it.
But
Of
but
course.
I'm not going to full port on a $3 billion company, right?
No, of course not. No.
Like, why would I full port on a 3 billion, which any medium size or big size company can actually buy this company out. If United Healthcare wants, it can buy out Oscar Healthcare tomorrow.
Okay, perhaps you hit it here first. Maybe that might happen. What's next? Okay.
Next is CLSK. I think that's Clean Spark, if I'm not wrong.
Yeah, I've been in this one a few times. This one's related to Bitcoin. We're currently on the weekly chart here. Before we dive into the daily chart, it's important to say that obviously Bitcoin hit new all-time highs this week, so that was quite interesting. But the Bitcoin sympathy plays, such as this stock here, you've got Mara, Riot, and all that, haven't moved.
Yeah.
Really odd. They just didn't move. I think.
Why is that? Mara has been like chopping. It's like barcoding basically, and Bitcoin is over $100,000 now.
So you've got the kind of classic Bitcoin is going up, but the market's going down, so it's just kind of cancel each other out. So I think that's probably why most of these stocks are just kind of going sideways. And
the best part was like this is a new trend, because I believe last year every time Bitcoin would go up, you had all these other miners, they would go up as well.
Yeah, definitely. Point here on technical analysis, we have the weekly chart here, as just mentioned. It's come out to resistance for a number of occasions. You've got this previous trend line here, and you've got the trend line coming down here, and then you've got the 50 moving average and the 200 moving average there as well. The only bright spark is it actually bounced off of the bright spark. You get that? It bounced off the 20 moving average there for CLSK. Let's jump into the daily chart. It's probably a little bit more interesting to navigate. So we just need to get a breakout of this area here, this $11 level, which is a good 20% away from where we are now. Yeah, I wouldn't be buying it here, that's for sure. I'd be waiting for that break and perhaps a retest around this $11 level, just because that's my trading strategy. Yes, it looks appealing here now, and yes, you can make money if that was to happen, but the likelihood of that happening is, in my head, thin. Yeah, we'll see.
Shane has thoughts on Mara.
Oh yeah, so we've got Mara is saturated with retail and MM holding it back, just collecting premium, nothing more, nothing less.
Yeah, this could be. Yeah, fair enough. I mean, I know that Mara is very popular, especially with retail traders. That's a given. Yeah, 100%.
I know you've got a current Mara trade, haven't you?
Yeah, I mean, I have been in Mara trades. I'm currently also in Mara trade right now. SOFI, next is SOFI. But because I sell options, I do mostly wheel strategy on Mara. So it's like mine are, especially for trades like Mara, it's mostly 3 months, 6 months. You take this big 10, 15 contracts, and then you just let it ride, collect the premiums, as what Shane was saying.
Awesome. So you picked up SOFI here. We've got this break of trend line, which we don't want to see, but we have seen. It's come back down to the 20 and the 50 moving average, which is not that bad. It's kind of hovering around this area. I think getting back above that 1360 this week would be the primary objective for me, at least. I think that'd be important for most SOFI holders. If not, obviously you've got the 200 moving average here floating just below there, and that kind of $12 level-ish. I know you like SOFI. I'll let you talk a little bit about SOFI, but that's kind of my overall thoughts on the technical analysis. I wanted to get back above 1360. What are you looking at here?
Listen, I mean, for me personally in SOFI, I'll probably enter around 12. And and exit around 13. It's like, just like Mara, just like what Shane was saying, I think you can just wheel this, time in and time out. There is, I know that there are folks that they just want SOFI to go to the moon, but in the meantime, while we wait for it to go to the moon, you can keep making money on SOFI. Get in, get out, get in, get out.
That's what trading is all about. Yeah, we normally cover quite extensively on SOFI, but there's not really much you can say here.
It's barcoding. Like, there is really nothing going on SOFI. You go on Simply Wall Street or any others, like a hold rating. You see SOFI bull saying buy the stock. You're saying SOFI hater saying sell the stock. Just keep trading.
The other thing would be to kind of hold these higher lows kind of coming into where we are now. So this would be a higher low area, so perhaps we can make that move a bit higher. That would be good for the actual technical side of the stock. And obviously making moves towards $16, $14, $18 eventually would be ideal to the upside. If we break the 200 moving average downwards, though, it could get a bit ugly. We could see sub 10 once again. Yeah, but it's just a bank, right?
Yeah, I mean, you also had the Robinhood whole story with Robinhood playing. A lot of folks are saying, "Hey, Robinhood is the new competitor for SoFi once they become a bank," right? So that conversation has also begun.
There we go. Competitors everywhere. Right, what's next?
Next up is HIMS,
A very popular one in the industry as
retail
well.
community. Yeah.
This is one I actually pointed out about 3 or 4 weeks ago on these streams, and I didn't take the position. Ironically, it was a break of this green line to come back down and retest it. And what do you know? It came back down, retested it, and flew up like 100%, which is, it's typical. It's what it is. Sometimes you get that in trading. It's not emotionally easy. Perhaps, Kaye, you might have a bit more experience with kind of when the stock runs and it goes and you miss out an opportunity. How does that make you feel? Because it makes me feel bad at first, but then realize actually there's plenty of opportunities in the market to kind of make up for it.
So I think I have come to that conclusion that will always happen,
Of
right?
course.
And that's it. Move on to the next one, right? It's like this, right? You're in a trade. You want the trade to move in a certain way, right? And it's not moving. And the moment you sell, it
Yeah.
moves. So I have come to the terms that this will always happen, and just move on. Just close chapter close. If you sell, if you get out of the trade, forget about it. Move on to the next one.
There's that classic meme, isn't it? When you sell the stock, it just goes up. As you can see
Whichever
on the
side you
screen,
are biased on, it will go exactly the same way the moment you close that trade, right?
and then
See, because think about this, right? If in a general trade, how do you put a trade? You put a trade and you have some kind of a stop loss, right? Now it hits that stop loss. If it's automated, it triggers and you exit the position. And then guess what? It was just a fake out. Unless you in an options trade where you are manually trading it, okay, you are like, okay, let's wait for the 20%. Let's say 20% is your stop loss, right? Okay, let's wait for 30%. Let's wait for, and suddenly you reach to a point where that you're down 80%. There's no point in even closing that trade anymore, right? So it's a catch 22 situation. I nowadays I stick to my risk management, whatever it is. I get out, I forget about it, and I move on to the next one.
yeah, everyone has that experience of going through that at some point in their trading career. It's just how you navigate it and what you make what works for you. But we'll turn back to the chart while we're here for HIMS. We didn't actually really talk about the kind of analysis side of things. We've got here handle bottom by FinXL here. Handle bottom being fib 0.5 around 46. So that would be around this sort of area here, which is not bad. Obviously, perhaps the 50 range might come up to act as a bit of complement at that point. Of course, we do have a bit of resistance here as well from previous price action. So that could be a point of adding. We've just had the gap fill on Thursday there, so I know you might have been looking at that during the week if you were to be looking at the stock, which I don't think you do too much. But there is another gap fill down here, and it's a little bit dramatic, but back down to $31. I mean, I'll definitely be a buyer there since I missed out over here. But I don't see it going back down to 32 anytime soon. Doesn't mean to say it won't in the future, but that's another point of contact that people should be looking for. But 46 for now in the near term, for sure.
Yeah. Yeah, I mean, definitely. I mean, HIMS is on my radar, but it just has run up so much that I don't want to get in.
It's hard to buy a stock that's up 100%, isn't it?
Yeah,
Very hard. We had it with basically Palantir all last year. So
exactly. I mean, I'll be honest. I have only invested in Palantir because you guys gave the idea. I don't actually follow the stock. I don't track anything. I just put a little bit on my portfolio and then I forgot it. So I'm sitting in a good, handsome profit, but I'm like, oh, well,
it's not enough to buy a house. So
it's not enough to buy anything.
there you go. Right, what's next? Okay.
Next up is BAC, Bank of America.
Cool. Want to talk about this one?
I don't
Banking
want to
sector.
talk about bank, man. It's like Bank of America is like the last time I was watching this Bank of stock, it was like trading around the $35 mark. Now it's $43. So doesn't seem like the stock moves at all. I used to trade this long time back, considering it was used to pay dividends and stuff. So I would when I was just starting off with my options trading, I would trade these dividend stocks. I would buy it, and then after dividend, I will like sell those covered calls right during the dividend time, where you would hope for the stock to go up. So this was my play, but the funny part is like these traditional banks, I don't have a very good opinion about them, honestly. It's like Robinhood is exciting, right? If you think about it, right? SoFi is exciting because the traditional banks are just like Bank of America doesn't even have a good high yield savings account.
So the reason we brought this stock up was because of this comment. And I'm very short on US banking sector, especially BAC, with the bond rate increasing, government reducing the support.
Mm.
So there's a good reason for it. Perhaps maybe looking more towards an ETF. Would you look more towards an ETF for longer term?
And you know the funny part about that, the comment FinExcel brought up, it's like you're short on and the Wall Street is like a strong buy on bank. It's a big, they just want to buy Bank of America for whatever reason. It's like one of the worst banks out there.
I mean, technically, it doesn't look too bad from a chart perspective. You've got the moving average just below. We've got a key support resistance level. We've got the gap fill here as well. So perhaps that might be why you saw a bit of a red Friday compared to
So
the market.
I don't trade Bank of America. I don't know if it's a tradable asset.
Oh no, it's not a sexy stock to trade. I'm just observing the chart that's in front of me. I would never trade Bank of America personally, but just in case someone's looking for that, then yeah, that's that. So what's next, okay?
It's TMDX.
Oh, this one was beaten up as well, wasn't it? It's also
This
healthcare,
is
I
the
believe.
Transmedic. Oh,
Oh, it's actually rebounded quite nicely. So it came all the way down to 58, and it's basically doubled since then. In fact, it's over
crazy.
doubled since then. Gap up on earnings recently.
So let's see what the earnings said.
So this could be this is
They had a beat on both top and bottom line, right? Very nice.
this is the kind of example that we have with UNH. This is kind of what we were talking about. What could happen potentially for the stock, could rebound nicely. You could make potential gains. But other stocks, like you said, like Boeing, for example, it's
Boeing is
not
still, yeah.
not being so pretty. It's just continue going down.
If
So
you
it's two sides to the coin.
Yeah, if you bought Boeing in 2019, let's say around the 350 mark, you are still underwater. And I'm
Yeah,
telling you this because I'm still underwater on Boeing.
there you go. We do have a gap fill here actually, which is not quite filled just yet. So perhaps that might be a bit of a point of resistance here. So whoever bought this one up, just be careful of this sort of area. Okay, Jew, Fiona, Esme. Just be careful of this kind of 126 level because it is a gap fill from November of last year. Perhaps we retreat down, kind of let the stock calm down a bit, maybe bring that 50 moving average up nicely, maybe towards this gap fill area. That'd be quite nice if it comes back down there for longer term. But yeah, that's kind of how I observe the chart. Are you looking at this one anytime soon, Kaye?
Now,
There you go.
next is right on your chart.
Rocket Lab.
Yeah, there you go.
I've always regretted not getting into this one because
What is, like a space company or what?
it is, yeah, they do launches, etc., and they do a bunch of stuff actually, from what I've heard. But I haven't really dug into it, and that's why I haven't taken a long term position. I was looking at it around here, and I have traded around these levels, kind of 6 to 8 ish, throughout last year. It went really well, but I'd never let my winners run last year. That was kind of the point we made.
Wasn't that Palantir was one of your never let?
Yeah, we won't get into that, but that was when we did a video at the beginning of the year, didn't we? Well, actually, on the turn of the year, about kind of what went well and what didn't go well
Yeah.
for the year of 2024. And one of the things for me was letting my winners run. I just didn't. I just took the target profit zones, had 1, 2, 3 target profit zones, took the last one, happened to move Rigetti, this one, Palantir, all of them flew up way beyond the target prices. Since then, obviously, I've changed that. I've kind of adapted to my strategy, letting the stocks run. It's not been so easy this year because stocks haven't really run as much. Obviously, with the tariffs, blah blah blah. But I've definitely changed the strategy. I've adapted it, and if a stock was to continue in the movement, I would benefit from that, given the correct price action. But this was one of them, unfortunately. But yeah, it seems to be on a bit of a path of success now, isn't it? Back up to $25. Got a bit of a channel zone, so we've got a couple of zones here. See what I can draw. Maybe you could talk for a second while I do this.
Yeah, I mean they have a decent amount of implied volatility. So if you want to play options, I think this is also it's possible, right? You get decent premium. I just don't know enough about the company to say, hey, if I want to, sell puts and sell covered calls. But if that's something you want to own, maybe you can look that option as well, because considering the stock is only $25, it's not going to be that much of an impact to buy contracts. Um, Let me see the leap calls. How expensive leap calls are. Yeah, I mean leap calls are also not that expensive. You could look at buying like in the money leaps for like about a $900 to $1,000 for maybe not June. Maybe if you want to do it January of 27, yeah,
Yeah.
that takes you up to yeah, maybe like a $10 in the money leap, and then you could sell those covered calls, monthly covered calls, at a higher prices to reduce your cost basis. So which is what poor man covered call, right? You could do that on these kind of stocks
Might
because
be
yeah,
worth
yeah, go ahead.
might be worth doing a video so people understand that a bit more
Yeah,
in the
yeah, okay,
future.
yeah, I can do that. Yeah, because I
Yeah.
think for stocks like these, I think poor man's covered call might be worth it because you're not, the stock price is not that high, so you could still manage within the $5,000 level, right? And you could continue to reduce your cost basis. I'll put that on my list. I'll definitely make a video on both poor man and synthetic long is another one that I know spending on my side.
Yeah, so going back to the chart, then obviously we spoke about channels before Kaye started talking there, and I've got a couple of channels here that stock seems to like. You can just trade bottom to the top if you fancy that kind of trading style. It's not for me personally. I like a break lower or break higher. But yeah, it seems to be going in the right direction, of course. And yeah, good from Rocket Lab. What's next?
Next is Apple.
Apple. I think this might be the last stock for the day. Phil wants to bring in a couple more.
We can touch Nvidia since nobody asked for Nvidia. We can touch Nvidia.
That's true. Yeah, we do have earnings very shortly from Nvidia.
Yeah.
Apple down 8% on Friday and down quite a bit. Oh, no, sorry, not 8% on Friday, 8% for the whole week. And it's been chopping around for a little while now. And you've always said, especially in the last couple of months, around the innovation, and it feels like they're kind of maybe chasing certain things, chasing headlines to make their stock price perhaps react. But the reality is they're not innovating. Yes, they're good, free cash flow machines. But if you're not innovating, you're not going to grow in the future, essentially, is what your kind of point is. And I think people might start to be realizing that.
Yeah, I mean the problem is that if you watch CNBC, right? Apple, with I'll be fully transparent here. Apple is my biggest position in my portfolio. I've been investing in Apple since 2009-10, right? So it's a very substantial, it's about like 40-45% of my portfolio is just Apple. So I am not going to go under on Apple, right? I am sitting handsomely on my position. I sell covered calls on a portion of it. I'm fine. But the problem that I'm seeing with Apple, and this is if you become part of a fan group or a cult, this is what happens, right? You lose your rationale, and the rationale here is, I don't know if you last week you guys saw Google came out with glasses as well, which is now going to compete with Meta. Apple does not have a single new product that they are launching. Now, suddenly we are hearing news that they're going to come up with all sorts of different products by 2027. So, nothing in 2026. So, 2027 means that by the time that product becomes commercially available will be 2028. That's 3 years from now. What's going to happen to the stock price by that time, right? Because we're talking about quarter by quarter.
Hmm.
And honestly, if you look at the trend line, right? Are you on the weekly or daily?
This is the weekly chart.
We on the daily we started making lower highs on Apple. I mean, why?
Switch to it.
I've been saying this for like, I don't know, more than a month, 2 month. Why would I pay so much price to earning on PE, on multiple times earnings on Apple when they are not innovating? Classic failure of Apple intelligence. Like last year, Dan Ives on CNBC had been touting, okay, and Gene Munster, okay, we are going to have the biggest super cycle turn of event on Apple. Nothing happened, right?
Yeah, I mean,
I'm
they
personally bearish, and Apple has to come up with something which is a new product category and has a hit. And I don't understand why they haven't really come up with a competition for Ray-Ban, the Meta's version of Ray-Ban, right? I'm very surprised.
Well, they did, didn't they? The Vision Pro.
No, no, no. So Vision Pro was competing with Oculus, right?
Yeah,
The
I
big
was joking. Sorry.
headset. Yeah, exactly. So and they doubled down on the for I think couple weeks or so, and then they kind of realized it's a failure. Like
Yeah,
who's going to buy a
100%. Yeah.
$3,500 Vision Pro? Come on, man. Seriously?
So these are the lower highs you've been talking about here. Just very successive. There's 6 or 7 there to be
Exactly.
mindful of, and it's almost in bear market territory on its own.
Listen, Trump came just now and he put a tariff. Forget the tariff, put tariff on the side. You have fundamental problems with Apple right now. Forget about tariff problems. That's like, you know, icing on the cake, but this cake is a mess altogether.
And if it continues going lower, it'll bring down Spine QQQ. So
Exactly.
that's why you'll see the drawdown. It'll be because these big companies will draw it down. Speaking of big companies, we're heading on to the last one. We've just had a comment with it as well from Charles Lovelace Turing. NVDA. Is that an interesting point on the chart? And also, we've got earnings on Wednesday. We spoke a little bit about this, obviously, well, do every week, really, I think, pretty much. But I think last week's commentary was on the fact that we're coming back down to the 130 line, and it's done so. I'm not getting too excited right now because, one, obviously, earnings just around the corner, and two, there's nothing else to really back it up. In fact, there's a little bit of negativity around this, even though it is back down to the 130 line, which I like. It's leaving all of this volume we've got here. So it's going to be leaving that potentially if we go down lower. So the next level I'm looking at is obviously this 120 line. I know you're probably looking at a couple of gap fills. We've got a gap fill here and here. So a couple of, I know there's lots of lines on this chart, but a couple of grey lines there, they're gap fills. So potentially if we do have a bit more negativity, maybe if we get negative earnings, guidance, whatever, this would be something to look at, the 118 line, 122, depending on what the comments have been made, what the earnings call is actually like. But either way, I mean, incredible reaction to price action in the last couple of months. What are your thoughts on the video? I know you have lots of thoughts on the video, so what are they?
So I think I'll reserve my thoughts because there will be a trade alert that will go out in Nvidia, and I'm currently working on that trade because I do want to watch on Tuesday how the option chains behave,
Yeah.
and then I will publish that article. But I have trade alerts on Nvidia for this week. We will play earnings on this one, and I will say this: it will definitely. I'm not very bullish on the price action, uh, but I haven't thought whether I'll be neutral or bearish.
So you're withholding your opinion because you've got some ideas for
Yeah,
your,
because I'm still looking at a couple more data points,
yeah.
and the problem is that because the markets are closed and Monday is also closed, I want to see some live data before I publish the article, whether it's going to be neutral or am I going to be bearish or bullish, right?
So without pushing people towards the kind of articles you'll be putting towards, maybe you'll have some comments around the markets during the video. So obviously heading over to X4 at InvestK might be a good idea because he will be vocal around the video, especially around the
Yeah,
earnings report.
yeah,
Yeah.
yeah. I mean, I'll definitely provide my thoughts on why I feel like it. Whatever trade I will take, regardless of whether you know get the paid article or free article, doesn't matter. I'll still provide my thought process behind it, right? Why I'm doing it.
Of course. There you go. Right. So that's it for the audience request this week. I think we actually had quite a good discussion on a lot of names this week. Obviously, we are heading into a bit of a shorter week, Monday off tomorrow. Just use that time wisely, whether it's be spending it with family, kind of taking a break, going over some old trades, or just refining your strategy. Do something that's productive enough to kind of either clear your mindset or improve your trading, so to speak. Before we move on to the closing statements, obviously a massive thank you to Wolf as well for using the platform here. We hit a massive 3,000 viewers today on a bit of a quiet Sunday. I think generally, obviously, it's the kind of holiday weekend type thing. We were talking about that before the stream. It's holiday here and obviously in the US, so people are kind of relaxing with their families, but it's completely understandable. If you have watched it and you have stuck around, please do share the stream so people can take this kind of information from you guys here, obviously, in the viewers, and obviously from the kind of perspectives and kind of thoughts that we had throughout the stream as well. Hopefully, they're somewhat useful to obviously all of you as well. Kate, do you want to close out the stream for us here?
Yeah, absolutely. I think it's a short week, as you said, and Nvidia probably is the biggest news for next week. But I'll also keep an eye on Salesforce. I know Nvidia is going to take the show, but I think Salesforce is going to play a role. next week as well, especially from the SaaS standpoint, so we can kind of understand how the SaaS market behaves. Nobody asks about Salesforce because these days software names are not that high flying these days. But again, stay safe. There are a lot of events actually, not just the NVIDIA reporting. We had the GDP numbers coming out, which we talked earlier. We have the FOMC minutes coming out, so you got to watch all those as well. And again, tight risk management, that's always required. And with that, I wish everybody happy Memorial Day. Go enjoy time with your friends and family. Have nice barbecue. Weather is nice depending on which part of the country you are in. At least in New Jersey, it's nice. So
awesome. Cool. So we'll be back this time next week, 1 p.m. Eastern time, and we will see you next week. Take care, everyone.
Take care.
Trading.